Aaron, welcome back to the show. Good to see you again. Thanks for being here.
Good to see you, Dan.
Yeah, I had to look it up. It had been so long. It's been since July 2020. So there's 4 years of stuff to talk about. Uh, the first thing I want to talk about with you, Aaron, is I knew you were coming on the show, and I know you have like Mindset Capital is a really good website for your business, and I went there, and the first thing I saw was this post that you had put up in March of 2020 about calling Charlie Munger on the phone, and he called you back in like March of 2020. The world was on fire.
Well, to clarify, I posted, so it's very interesting you bring that up, but I actually didn't contact him on March of 2020. What I did is when the world was melting down in March of 2020, I was recalling a story of when I called Charlie Munger in October of 2008 and the advice that he gave me, which is pretty incredible. I just as a background, I had an opportunity to meet him and spend some time with him, and he was just incredibly kind and just available. And I drove with him and talked to him, and he would just tell me how I was wrong about things. And anyway, it was really great. And then that was like 3 or 4 years earlier, and then I would just send him like a box of chocolates for the holidays every year. And when October 2008, I'm a money manager, and I was getting killed like the rest of the market. I was down like 40% or something.
Like everybody else, yeah.
And out of the blue, it was very, very, very scary time. It was the end of 2008. And I remember I was like, you know what? I'm just going to call Charlie Munger. I'm going to see if he wants to talk. And I called his assistant, and I told, like, hey, I'm Aaron Edelheit, if you remember, or I spent time with him like a couple years ago. I just wanted to ask him like for advice or how he's thinking about this. And she said, okay, well, let me see. And then, I don't know, I forget if it was like an hour or two later, it calls up. I'm talking to Charlie Munger. And like 10 or 15 minutes into the conversation, he goes, hold on a sec. Or he goes, Warren is on the other line. I'll call you back. Click.
Wow.
And I'm looking at my phone, like, and now looking back, you read the story, they were like literally saving the financial world, right? Why are you talking to a schmuck like me? Like, go save the economy or something, save these Bank of America, our banking system. And he calls back like 30 minutes later. And what he basically told me is that the price of admission to be a really good, or not even great, but just to be an investor is every now and then the market will fall 50%. And he was recounting how it happened in his life when he was a money manager. And he's like, that's the price of admission to being an investor, is that you're going to have panics and you're going to have things that are really scary. And this is all part of being an investor. And then like 2 weeks later, I got in the mail with no note, but it was from him. It was like, since the address of Charlie Munger, and he had printed out the year-to-date performance of some of the best money man of all the top like hedge fund managers, and he had highlighted ones that he had respected, and they were all similar to the numbers that I was, and that's all he sent. And his message was, you're no different than anyone else. It's happening to everybody. And it was just this amazingly kind gesture that he did in a very, very scary time to a person he barely knew, to just be like, hey, this is what happens. Let me share my advice. He didn't tell me like, oh, you should go buy this or that, or this is what I would do if I was in your situation. He was just like, and out of that is, and I'm sure we talked about this in 2020, is out of that, it was like I had a side business where I was buying foreclosed homes. And I don't know if this gave me the confidence, but I decided to really just start leaning more into that And then eventually that ended up being 2,500 single family rentals. So I like to think that that was kind of like the genesis of just, hey, let's tone down the emotions. This happens regularly. It sucks. Now what are you going to do about it? Right?
Yeah.
And that this is the price of what happens. And like at any time, stocks can fall 20, 30, 40, 50%. And it's a regular feature of the stock market.
Right. It's a regular feature that drives people nuts.
Yeah, like every 10 year, 5, 10, 20 year, you're going to have a period that's super scary or it feels like the world is ending. And let me tell you, 2008 is about the closest that I have felt. And I think a lot of people in hindsight, because of what was happening, is about the closest we came to like a Great Depression stock market crash kind of thing. But it's just good you keep in mind.
Right. Right. Don't be surprised when it happens because it's a regular feature. And but there was a good lesson. Like you told basically that story in what 3 or 4 posts or something. And then your point was, how can you help others today? Meaning, during March 2020 when everything was melting down. So you were kind of paying it forward a little bit.
I was just trying to be like, share, like, look, this is a very scary thing, but let me just share this advice. And then the reality is, like, because of a lot of things, and we don't have to go into this, like, the market snapped back, and it was like, it's just a reminder that, like, when things are the most scary or things are, scary, is that there's actually, there can be lots of opportunity.
Yeah, I have to imagine that might be some of the best advice you could possibly get from anybody, but Munger too. Like right in the middle of the crisis when he's on the phone with Buffett in between. Like he's obviously
that's it. And he was incredibly calm. Yeah, incredibly calm, just explaining, oh, well, in the 70s, and he had some, like, if you ever go back to his old numbers, he had like a couple of years that were terrible. And then he bounced back, and then he actually retired. Like he just was like, I'm done with it for whatever reason. But he was just explaining, like, this is what happens. And what I find, what's very helpful for me is I'm a very passionate, emotional person. And so it's really, really helpful. And I actively work on how do I stay calm and cool. And the best investors of all time are these calm, cool people. And so part of it is like understanding myself, how I invest. And like what I've learned is I'm a much better long-term investor and I'm not a very good trader. And so what I try to do is put all of my passion into long-term projects where stuff shouldn't really change. And so I'm not like a yo-yo freaking out. And then just also reminding yourself that this happens. So much of investing is just knowing yourself, knowing your emotions. How do you deal when things look scary, etc. And so that lesson from him was just incredibly invaluable, and I think about it to this day.
Yeah, your story reminded me of Guy Spears' book, Education of a Value Investor, which came out like 10 years ago or something. And also a very, it was a very heartfelt, rather passionate story about, his own, some of his own rough times as an investor. And it's an interesting topic because the overwhelming majority of the time, like almost every time it comes up on the podcast here, the point is, control your emotions, or some people even say, keep them out of the process, which sounds impossible to me. And then one guy,
I don't think that's the right way to
then one guy we had on the show, John Netto, said he actively wanted to use his emotions, like when he was really scared, maybe that was the time to be bullish, that kind of a thing. So do you have like, this sounds like it was just a really good, a little session you had with Charlie Munger. It calmed you down. It helped you out. But do you have specific ways, like you mentioned long-term investing, like, is that your primary way to sort of manage your emotions, is just to stay focused on the long term and don't worry about the short-term wiggles?
Yes, and that's why I constantly, there'll be an idea that'll pop up and it'll be like, oh, that's a really interesting short-term trading opportunity. Like we all see it, like, oh, I bet that's a, and then I just remind myself like, well, this is not, not the road. And I used to in the past when, especially around my first fund, um, I used to short sell a lot, and now I just don't. Because unfortunately, because of short selling and you can lose a lot more than 100% of your capital, you got to really pay attention to the short term. And then I see other money managers that are like, and this is totally different strategy, right? Like this works for some people, but they'll be like, 90% or 100% long and 50% short. And, they have all this, here's my gross and net exposure and like leverage. And to me, it's like, oh my God, like, yeah, could I probably make more money doing that? Yes, but with my emotional makeup, the stress it would make me want to focus on the short term.
Yeah.
And I want to make long-term good decisions. I also think there's an arbitrage where everyone's point of view is so focused on what is working right now. How am I positioned? And it's so uncomfortable to be in something that isn't working right now. Or why is it the craziest thing is like that I see, and I see it prey on people, and it preys on me, it preys on everyone, is like have a thesis or an investment, or maybe your portfolio is structured a certain way, and the market's going up and you're not going up with it.
Right.
It destroys it. People lose their mind. Like the FOMO and the just
Clients
like, oh my gosh. And I remember the first time this happened to me when I first started managing money in 1998. I was like a golden god. Like literally, 1998 to 2002, I was averaged like 27% a year net returns. 2002, I think I was up something like that, like 27. The market was down like, I don't know, 40 or 50. It was like a crazy, terrible year in 2002. And in 2003 came, and suddenly the market was up and I was down a little. I almost lost my mind. I was like, 2003, I was like close to 30, but I didn't have the emotional maturity to be like, well, if you're doing something different than the market, you're going to underperform sometimes. But it was a very valuable lesson at that time. And then you just study and you learn from history, and you're like, oh, it's okay to underperform sometimes. But it's like one of these things that you just kind of learn. But some of the other things that I've done that I do, and I wrote a book about it, where every Friday night I'm already looking forward to it. Every Friday night to Saturday night, I turn my phone and computer off.
The hard break.
And I do not.
I love it. Yes.
Yes. So I'm
an advocate.
I don't know how everyone stays connected to every single person they've ever met, every professional contact, and even if they don't respond, people can reach them and they'll see it. At every waking hour of every day. It's insane to me. And I wrote a whole book with all this research that shows it is. Yeah, and I think that's another way of just like letting off some steam, returning. I'm just Aaron. I'm not an investor. And then I get this whole excitement again by the end of Saturday night. I'm excited to see what's going on. And the latest thing I've been doing for almost 2 years, which is really great because I had a terrible 2022. Where I made some mistakes, and then if you're in small cap or, illiquid stuff and the tide goes out, turns out you're not wearing anything. And what I did is I just realized I had some really good companies. I had made some mistakes, but I still really liked my core investments, but they just weren't doing well. It's like, there's not much you can do when the stocks aren't doing well. And so what I started doing is regularly doing, and this is my wife's insistence, hot yoga. And so just in the middle of the day, I just go do hot yoga. And what I have found, and now I do it 3 or 4 times a week, is I sweat everything out. And then somewhere, when I first started, it's like my mind is going because it's the middle of the day and it's like I have all this stuff and this is moving and that and oh my gosh. And then it slows down where you're sweating somewhere, you're trying, and you're like, at the end, you're just trying to get through it. Like your mind is good. And then I'll take a shower, go right back to work. And I just found my anxiety level and stress level so much lower. And my decision making suddenly became so much stronger and clearer. And since the end of 2022 till now, my funds have been on like a run. I am making much better decisions and fewer decisions. So not jumping in and fewer and just focus. I find myself really, really focused and open, and the day-to-day stuff just isn't as extreme to me. And so those are like a couple of things, but focusing on the long term, turning off, and then most recently hot yoga. Because in my business, what investors are paying me to do, well, they're paying me if I make money for them. So I get a percentage of the profit. So first I have to make money. But what they're entrusting me to do is make good decisions, right? That's my job. It's literally to make good decisions. Right. And so as a money manager, I've got to put myself in the best possible place, both physically and mentally, to make good decisions, to understand who I am, my strengths and my weaknesses. My mentor tells me that your greatest strength is your greatest weakness. And so I think one of my great strengths is passion and emotion. But in the short term, that could literally destroy me. I probably would be dead if I was like one of these active, traders. And so those are some of the things that I'm just cognizant of as an investor.
Yeah, I've learned the power, of your idea about a hard break. I've learned about that, but as a writer over the years, I've just learned the value of the time you don't spend at the keyboard typing and writing. Because things happen between your ears that you don't know about, and you need to give them time to happen. And it sounds to me like there's an element of that, certainly in the hard break, but also in the hot yoga. You're just getting away and doing something pretty healthy in addition, and then you come back to it and you're refreshed and you've taken a break and your subconscious has been working on some things and you've relaxed. It just sounds like you're in a very. It sounds like you're in your flow, right?
Yeah, no, I think that's it.
Flow. Yeah.
Well, yeah. I've always wondered why some really great VC investors or other investors or some executives are so into surfing, and how they'll just pop out at a chance and go surfing. Mm-hmm. And I just suddenly realized, it just hit me. I was like, oh my gosh, they can't bring their phone out there. They're out in nature. They're in a flow. They do it for an hour or two, and then they're just heading right back to the grind. And they've just, in a weird way, the ocean is just kind of washing over you and clearing you out. And just sitting out there, and just, I think people find different ways to kind of deal with the uncertainty and the craziness of life. And like investing is just, it just takes all the emotions and psychological and just amps it up to 11, right? Fear, greed. I was explaining this to a friend, and I'm like, all you're dealing with in the financial markets is like, oh my God, I'm going to make a lot of money. Oh my God, I'm going to be out in the streets. And it's like, fear, greed. And it's like, and then FOMO. Oh, people are making more money than me. This sucks.
Yeah, and then once in a blue moon, it's like, hey, I did it, and other people didn't. It's like, and all
that's like, oh, look how smart I am.
Yeah, exactly. And, it's so the incentive somehow the experience of participating in financial markets. It's like all the worst buttons of human nature are pushed, at some point.
And that's why Charlie Munger writes so much about psychology.
Yeah.
Yeah. That's why he writes so much about human folly and misjudgment. And what's the most fascinating thing is when you read so many investors' letters, it starts getting into philosophy and psychology. We're all wrestling with the same stuff. And like just trying to figure out like, hey, how do I get this in my brain in the right way and to make good decisions or to try to guess in a way, some of it's like, almost impossible.
Yeah, when I first started getting into investing, I had no clue how much was psychology was involved, emotion. I mean, you got to learn that quickly, but hopefully. Right. But I got quick question for you. How hot is hot yoga? I've always been wondering about this. Is it like sauna level, or what are we talking here?
Yeah, and I'm just like, yesterday I did the one that's called Hot Power Fusion. And it's, at the end, it's like I was swimming.
Can you just, for people that may have not been around in 2020 on this podcast like myself, can you just kind of explain a little briefly your actual, we talked about psychology and everything, like, what do you look at like fundamentally, when making an investment?
So what do I look for?
Yeah,
for like
from the value.
Can you repeat the question?
From your value with your fund, with the value fund in particular. Your.
So it's really interesting. So I had taken my trajectory just really quick is I ran a investment fund for like 11 or 12 years, and on the side started buying foreclosed homes. And then in 2011, I looked at my opportunity set, and this is how I think about things, so it'll answer your question. And I was like, well, I have a $20 million small cap value fund. I'm competing against the best and brightest in the world. And I'm on the courthouse steps in Atlanta, Georgia, and I'm looking around and no one's there. And so I just wound down my small cap fund that I had done well on and went all in and ended up buying 2,500 homes. And then sold that company to a public REIT in 2015. Took about 3.5 years, wrote The Hard Break, The Case for a 24/6 Lifestyle, which was actually really hard, writing a book that doesn't suck. Yeah. I didn't realize it was going to be that hard. And then when March 2020 came around, I looked at it and I love investing. And I looked at what was going on and I was like, oh man. And I decided I'm going to create a friends and family investment partnership. And I'm going to start writing. And I started doing it just for, fun and everything. Not for fun, because I thought I could make money too. But it is fun for me most of the time. And then what I did is the thing that I'm doing now, more than just regular small cap value, I saw a complete dislocation, which was fun to be a part of. But what my main focus now and how I'm investing is most of it is cannabis. Mm-hmm. And we can get into that. And the main thing is because it's federally illegal and 99.9% of the smartest people on the planet in the investment world are not involved. I feel like I'm standing on the courthouse steps in Atlanta, Georgia, and I'm looking around and I'm like, I can't believe, the kind of companies that I can invest in and the opportunities and this long-term opportunity in something that's very illiquid. And so kind of how I like to invest or how I like to see things is I don't like doing what other people do. And I'm looking for long-term opportunities or growth where I just don't have much competition. Because I think that there's really, 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 really smart people out there. And then you have computers and algorithms and now AI. And it's like, what edge exactly do I have? above them. But then you also have distortions in the market and stuff. But so how I'm generally approaching things is like, I'm looking for where other people aren't, and or something's disguised, or where there's value that for whatever reason there's a block between investors coming in or out.
It seems like,
and so when I was buying foreclosed homes, who in their right mind was buying foreclosed homes in 2009, 2012? Like, people, especially in 2010, like, people would look at me like I had a third eyeball, and it's like, and so I kind of run towards the fire. So like, I had launched a cannabis fund. I told you I had a bad 2022. I'd launched a cannabis fund. One of the reasons I got into cannabis is I'm a workaholic. That's one of the reasons I do the Sabbath. And so it's hard for me to turn off my brain. I suffer from bouts of insomnia. And so a low dose gummy has been life altering for me. And now just knowing I have it is kind of all I need. Because I know that if it's like 1, 2, or 3 a.m. and I'm not sleeping, I can take one. And every now and then I need to go through like a week where I'm taking it. But it's, and so it got me interested in it. And then I launched a dedicated cannabis fund at the end of 21, beginning of 22, when cannabis stocks were down 50%, right? And I said to myself, oh, how much further can they go down? Well, actually, apparently another 50%.
Yes.
And so that was less than fun. But since then, one of the great things is if you invest in companies that are doing really well or doing something really well and generating cash flow and really growing, like, the stock price eventually will take care of itself. And so that's been very helpful recently.
Yeah, it seems like the, every now and then there's some noise about federal legalization in the U.S. And then, if you just use the MSOS ETF, MSOS, just as a gauge, like, that'll pop up $2 or $3, and then we don't hear about it anymore, and it'll settle back down. And so I just tend to look at that, and I'm kind of waiting. I'm like, I expect to look at it one day and see it. I think it's $5 or $6 or something still. I haven't looked recently, but I expect to look one day and see it's $15. Whoa, it happened. It's happening. It started, but I feel like the political momentum, it just seems to really weigh on the market for that. Am I right?
Yeah, well, I think part of so there's a whole bunch of issues inside cannabis that make it utterly fascinating. But one of it is that of the investors that are in cannabis, they mainly focus on the top 5 companies and the MSOS index. And everything kind of underneath that is kind of ignored. And most of the volume in the market kind of goes to those companies. And there's very little research that's gone on, very little due diligence in general on like unit level economics or, and most of the focus that I find in cannabis is, when is federal reform going to happen? Because when federal reform happens, then this big trade is going to happen. I'm going to make a lot of money in the short term. This goes back to our conversation about everyone wants to know, when is it going to happen? I don't want to invest until what happens if it takes too long, right? Like, I don't want to wait. Who wants to wait? And so while it is frustrating, like, and one of the things I write about and I talk about is, our federal government was set up so that nothing is done. They act like lots of stuff happens and is done, but they don't. It's literally set up so it's really hard for change to happen or anything to happen. And so we've gone on in this process of like federal reform, and cannabis is not like a top 10 issue for most people, and it's very popular across everything. And state by state are legalizing it in different ways. And the federal government is just like on a different path and time. So for me, based on what I see in my research, et cetera, what I believe, it's a question of when, not if. And that you just have to be patient, that there are times it's going to be disappointing and pop, but that the direction is very clear. And it's kind of absurd that it's the Schedule 1, like it's the most dangerous drug in the country. It's the absurdity of cannabis is just part of it. And the history is horrifying about why it's, it's federally illegal. It's just because of Richard Nixon and him wanting to target African Americans and hippies against the Vietnam War. It's just very clear. It's not even in dispute.
No, John Ehrlichman said it out loud in public in an interview.
Yeah. So it's just like it's kind of a joke, but and there's so many myths around the plan and about the process of the plan. And so the approach I take is what companies are focused, are operationally excellent, are showing that they're doing something different, and just following basic research and due diligence. And what I'm finding is some companies are starting to break out despite the lack of federal reform, excessive regulation, and taxation. And you just have to, it's almost, to me, the way I think about cannabis is like, you're investing in a developing country. There's shifting regulations. There's an illicit market and a gray market. And things are changing all the time, but the growth is fantastic. And so it's like, yeah, there's risks. And yeah, there's stuff. But it's like, it's very clear kind of where it should be going and that there's lots of opportunity. And again, what I love is that like no one else is doing, and I'm happy to get into specific companies or not, but there's my largest investment. I'm working on an earnings model with them, with my analyst. And I suddenly stop and I'm like, how many people do you think have actually worked on an earnings model for this company? And we kind of came together and we thought there might be 4, maybe 3 in the entire world, and that we were 2 of them. And this is a company that I believe is going to be growing at triple digits and will have over a 50% EBITDA margin next year, right? Like, so it's just like an exceptional company and so like, that's the kind of opportunity that I see. It's the equivalent of like, hey, I'm buying a safe suburban 3-bedroom home in Atlanta for $50,000. It doesn't seem right,
Yeah, that's amazing. I just want to be clear on something. Like, are you solely focused on cannabis, or just like kind of?
No, I have other.
You have other. Okay.
Well, I wrote about that, but like Charlie Munger says, the first rule of a fisherman is to fish where the fish are, and the second rule is to not forget the first rule. And so, what's super weird is I have this general value fund that's now mostly cannabis. I have a dedicated cannabis fund, and what I find is like there are opportunities, and I have a wonderful long-term investment in a company called Nelnet, which I think is probably the best successor model to Berkshire in terms of just a phenomenal track record of growing book value. It's a complicated story. When you get in, it looks like a student loan company, but is actually has a bunch of technology investments. And it's out of Lincoln, Nebraska, and it's like no one really covers it and no one follows it. It has this phenomenal. So I have investments like that and other things like that. But most of my investments are like, if I just offered you like, hey, I think there's a company that's growing at triple digits that has a 50% EBITDA margin, and has all these competitive advantages. And oh yeah, you can buy it at 4 times next year's cash flow unlevered. You're going to be like, wait, why are you focusing on anything else exactly?
Yeah.
So that's what I see.
Yeah. That's so cool, man. Because, there's the narrative that is everywhere is, value is dead. And you even see articles, in various publications that talk about value being dead. But you can tell, like, this is such a general, it's such an unwarranted generalization. And it's not the result of anyone who is doing anything like what you are, going bottom up, one company at a time, and really trying to focus and find something, because you can always find something. I remember that book by Peter Cundill, right? There's always something to do. There's always something out there that is like gushing cash and no one's paying attention to it, for example. So I'm very, very happy to hear that you're finding these things. I mean, like, what, generally speaking, are these are like, is your portfolio mostly like under $1 billion market cap or under, some amount? It's way under.
Oh yeah, there's this. Yeah, no. So some of them are close. But I rarely invest in a large company. I think Nelnet has like a $3 billion market cap, but like in terms of the cannabis companies, I have one that's like near an $800 million market cap, but some of them that are like $150 million market cap. To me, the size doesn't matter. What matters is, do you have a reproducible model or a pathway to growth? I think the problem that most value investors have is hey, this stock is undervalued. I add up this value some way. Could be like a sum of the parts, could be it trades at a below market multiple, or, this, and this. And there's just no growth. Or you don't have a management team that in any way, shape, or form is going to realize any value or do any kind of buybacks.
Yeah.
And what I've learned is that you're just in a value chart, it just goes nowhere. And so like the difference between like Nelnet doesn't hold conference calls, has one analyst who, in my opinion, does a terrible job of like basically understanding the company, but that doesn't matter. Like they don't market themselves at all. And so you would think it's just like this value stock, the earnings aren't really going, and like the stock's going to go nowhere, right? Well, no, actually, because in March of in the second quarter of 2020, in one quarter, they bought 4% of their company back. And when the stock goes down, they go to town buying their stock back. And then when you analyze it, they're now building up a shareholder base that are like, oh, wow, they're taking these short-term charges. They do these securitizations on like solar financing and like education. So their earnings look really low right now, but look at the cash flow. It's just like pouring onto the company's balance sheet. And look at the long-term growth in book value. And anytime the stock falls, management who already owns 50% of the company is buying back stock. So what I generally see is like, you can have an undervalued situation, but if management isn't doing anything or doesn't have the wherewithal to realize that value, it's just going to sit there. And then, or you're growing. And if you're growing, no company's going to sell at 1 times earnings or 5 times earnings if you're growing.
That's right.
It's just not going to happen. And so the other way you can create value is being like, and this is what clearly people did. You can make an argument. Somebody investing in NVIDIA like 4 years ago was a value investor. If they understood, now this isn't my level of expertise, but there are some people very clearly understood, hey, there's some shortage, there's something where they can produce this. We're going to have this. We could have this big uplift. And if it happens, companies going to be able to print money. And these are the different, and I think the same, there's another value manager who made this call on Amazon at the beginning of the cloud computing. And I just think that the other way that you can create value is just being like, hey, I understand this trend, and I understand where earnings are going, and I understand this business model, whether it's like Walmart or Home Depot, or it's this reproducible kind of model. The company gets capital, they reinvest it at very high rates of return, and there's something that people aren't seeing. That's where real value, and that's what Warren Buffett and Charlie Munger actually taught Warren Buffett to see this.
Right. To recognize wealth creation and the potential for it to continue massively, might be one way to sum that up. And because of that, I'm glad you mentioned Warren and Charlie. Because of that, a lot of people you'll hear them say, well, we're looking for a company with a wide moat and great management and all these things that we got from Warren and Charlie, which I find very interesting because it seems it's almost like um, you can't beat that out of the market. Like you can still do it to a certain extent. Like you're doing it, you're just doing it with smaller cap companies, right?
Yeah, but the difference with me is I'm doing it, but I'm also look, if I was just doing small cap value, I think this would be a very challenging market to build a portfolio in right now. As I'm, just being honest, I just happen to be in cannabis where no one's participating and there are all these barriers because institutional investors are not involved. There's just tremendous opportunity across the board, actually in public and private companies now. And I think the other big change from when I started in 1998 is there's just a lot more financing of private companies that used to go public, where you could do really, really well. If you just think about the companies that used to go public, that in today's market wouldn't.
Right. The point I was going to get
and I think that's another big change is that you just don't have the kind of really fast growing that they're staying private longer. And so to me, and this is just what I'm focusing on, is like, I just really like it when there's just not a lot of competition.
Right.
And that's where I'm attracted to, and that's where I'm putting my money.
Makes sense. I mean, you want to be the guy on the courthouse steps, right? Nobody's there and you're picking up bargains.
It feels silly, right? And the crazy thing is, when I started buying in 2009, if you had priced me in 2011, I probably would have been down 50% on those homes. Mm-hmm. If you had priced me moment to moment, I would have gone down, my portfolio would have gone like this. Mm-hmm. And then one day in the summer of 2012, Colony Capital and Blackstone showed up, and prices went up 50 to 100% that day. And then they basically never looked back, and still haven't looked back despite a lot of trouble. And that basically the investment that I was making is there's no way that you can't take a place like Atlanta or Charlotte. I wasn't buying in any area that wasn't growing, because I knew at some point you needed to build homes. You can't have 100,000 people on a net basis move to Atlanta and have homes sell for 50% of construction cost. You're going to run out of homes. Yep. It can't go on for very long. And so, when I think about how I'm investing now, especially in cannabis, is I think we're on the cusp of 20 or 30 years where cannabis is like the great replacement. And it's just replacing things that Americans are already consuming that are very, very toxic to them. Where there could be, like for me, for Ambien, where you can't take Ambien longer than 2 weeks, and God forbid you ever see the side effects. It's frightening. And then like alcohol, it kills 180,000 Americans every year. CDC estimates costs about $250 billion of economic damage. And you can see the top alcohol companies, their volumes are falling. It's because people are turning, for what most people want, people are turning to cannabis. Last year, 0 people died from cannabis. The previous year, 0 people died from cannabis. Right. And it goes on. Not that it's the greatest thing in the world, and it can't be harmful to some people, and some people can't get addicted or abuse it. But if you just compare it side by side with alcohol, it's literally no comparison in terms of the toxicity and the damage to yourself, your family, your community, the society in general. And so that's when what I'm counting on is like, it may be a while before the financial world is able to participate in cannabis. I may be sitting there for a while, but I have growth trends behind me. Right. Where state after state is legalizing and people are turning to it because they're finding out their aunt, their friend, or whatever. Oh, I'm sleeping at night because of this. Or, I'm having cancer treatment and I'm throwing up and I'm having cannabis so that I can, kids being treated with epilepsy, or alcoholics being like, well, now I have a cannabis beverage and I'm not an alcoholic anymore. And like, this is the data that's coming out, and, or that workers' comp claims go down wherever cannabis is legalized. And then you're just like, wait, what? How do workers' comp claims? And then you realize, oh, wow, Americans are consuming things to get through the day that are really, really bad for them and for whatever they're dealing with. And so, like, I love it when you have an investment trend where there's this long tail kind of pushing you forward. And then you can just be patient. And I can be very passionate and emotional about cannabis. It's going to be great. And you're going to, but then also reminding myself, federal government set up to not do anything. And that we're governed primarily by very elderly people who grew up in the war on drugs and on things, basically what we've been told are not true, and that slowly but surely that's changing.
Right. They're not going to live forever.
Yeah, I could.
So it will change.
Unlikely.
And there is great potential with something like cannabis for that sort of what you described, the colony capital moment. For some, there's great potential for, a moment where, the federal government does start getting on track, or, there's somebody.
Well, they're working on rescheduling right now.
Right.
They're working on the rescheduling. It's just the government. It takes forever. I was disappointed they announced the hearing on December 2nd. It's basically up to the DEA where they would take it from Schedule 1 to Schedule 3. Mm-hmm. And they're working on it. It just takes forever. It's government, so it takes forever. And in the meantime, you're going to have a bunch of states vote on it in November. Mm-hmm. And so it's happening. It's just painfully slow. Right. And at some point, you're going to wake up and this investment opportunity won't be there because there's other people that have crazy low costs of capital, private equity firms, VC firms, Fortune 500 companies, big investment banks who are going to, participate and invest, and it's not going to be me. But that's not my job. I don't ever have dreams to be one of, that. That's not what gets me up. I like finding the diamond in the rough, or, oh, no one's over here in my little fishing hole. And I think this is like idyllic and amazing. And then I hope, one day I'd like people to come over.
Right. They'll get there, man. They'll get there. It sounds like, it just sounds like a great setup. It sounds like an ideal sort of, contrarian deep value setup. And it's no wonder that you're focused on it. And, Nelnet sounds really cool too. So that's...
when you think about value investments, like Nelnet's a great example. You just have to ask yourself, every time I look at an investment as a potential, I'm like, well, why haven't other people discovered this? It's like with Nelnet, if you screen it and you look at it, you're like, why would I invest in a student loan company?
Right.
Yeah. And then you're like, why? And then with cannabis, it's like, why aren't other people investing? And then you just realize, oh, wow, my fund is on Morgan Stanley's banned list because they think I'm a drug dealer. Okay.
Is that true? That's true.
So it's 100% true. I have had people that cannot send money from their own Morgan Stanley account to my fund because I invest in cannabis. And so you just realize there are structural barriers there. So you just have to ask yourself, like, why are investors not investing in this? What do they not see, or what thing do they not understand? Anything that's easily screened, anything that's easily scraped, anything that a computer can understand or you have no chance. You literally have no chance. And it's not confirmed or destined for the stars that I'm going to make lots of money in cannabis. This is just my thesis, right? I'm wrong all the time.
No, the point is not that it's destined in the stars. It's that you can find a very attractive kind of deep value, many times cash gushing sort of a situation that's off the world's radar screen, right? I mean, it's about the expectation of return. It's not about, Aaron's definitely going to be a billionaire in 10 years because he's doing this. I mean, it's not about, we don't get that certainty, but the certainty you can get is I found an investment that ticks an amazing number of the boxes that you really want to tick if you can do so at all. That's what gets me excited. Somebody predicting that something is going to happen doesn't get me excited, but telling me that you found this situation with these characteristics, that is very exciting.
I agree.
Yeah. And eventually the government will get around to doing something in Congress positive. It's not, you can't imagine things are going to go backwards at this point. It's just a matter of, I don't know. Yeah.
It's unlikely. And especially now that you have two presidential candidates. I mean, Trump just came out with very positive comments about the amendment in Florida, and that he's heard medical cannabis is amazing for people. And he has some of his top advisors are all for it, including like Elon Musk and others. And it's, and then you have on the other side, Kamala Harris and Walz that are very clearly pro-cannabis. And Tim Walz in general has been like, I mean, Minnesota's like ground zero for like, especially the explosion of cannabis low dose beverages in Minnesota. It's literally ground zero in this country, where something like 15 or 20% of liquor store sales in Minnesota are low dose THC beverages.
There's a big push among
and so
younger
there's
people
a lot
like
of
going away from alcohol just in general. I mean,
yeah, just imagine I offered you the following drink and you tell me if this sounds attractive to you, right? So it relaxes you, it gives you a buzz, food is more enjoyable, music is more pleasurable, you sleep great at night, and you wake up with no hangover. What do you think the market demand is for a product like that? that you drink?
Yep.
Right.
I wonder why wine sales are plunging. Oh my gosh, it's shocking to me. Right? I think one of the most underreported stories right now is what's going on in Minnesota and several other states of low-dose THC beverages made from hemp. And it's just an example of the kind of dynamic growth that's going on inside cannabis that no one's focused on because, all the big investors, all the big investment banks, all the money is like, hey, until there's some kind of federal reform, we can't touch this.
Right. Banking is an issue for the companies themselves. I live in Oregon, and there's a pot shop every 10 feet or whatever. But and if you talk to them and stuff, they're like, everybody pays in cash, and then they wind up with that problem. What do we do with all this cash? So it would be, it would really.
Where in Oregon are you?
I'm in Southern Oregon. Near
are you near Medford?
Yep, I'm right near Medford.
Oh my God, my largest investment, Grown Rogue, I actually think one of the best companies I've ever come across is in Medford.
Yeah.
You need to go visit, Dan. It's absolutely amazing.
Okay.
Boots on the ground
sounds
trip,
like a good
Dan.
idea.
You would love the CEO, O.B. Strickler.
All right. I'll have to do that. I had my own little sort of foray into cannabis in my newsletter, and I was one of those, it's down 50%. What's the worst that could happen? And I just got completely, obliterated out of those stocks. I was like, okay, well, that didn't go so well. But I should revisit, and maybe visiting the company that's near me would be a good way to start doing that.
I'll introduce you after. You'll absolutely love it. They both do indoor and outdoor, but their specialty is indoor. The CEO's office is the crappiest CEO's office I've ever been in. It's an open air room. Yeah. Yes, it's an open air room with no doors in the grow house.
Awesome. Love it. Yeah. The bare bones are the better. That's great. I'm sorry about all the noise. I don't think I'm going to schedule any more interviews at 11 a.m. on a Friday, because that's when the gardeners obviously show up and start making incredible amounts of noise that then cause the dogs to bark, if you can hear those. And then my wife's yelling at the dogs to shut up. So I hope all this noise in the background isn't.
Can I tell you a very funny story? When I first started out, I started out in June of '98. I had a friend that from college had started a business with his father, sold the business, called me up. I was the only moron who knew anything about investing. And so after a couple of months, he's like, yes, why don't you invest some of my money? And I was like, okay. I moved above my parents' garage in New Hampshire, like literally. My dad didn't even think I had a real job. He used to cut out job like wanted, like, job clippings like, hey, this looks good. And I'd be like, no, I actually have a real job trying to build something. I just don't have any money. And I remember obviously things are very different now, or it's totally acceptable for, noise or whatever. Everyone knows we're all trying to do our best, right? But I remember I'm trying to act like I'm a real investor. It's like 1998. I'm calling the CFO. I'm grilling him on questions. And I'm above the garage. And my parents have a schnauzer. And the UPS man comes up, and I'm like right above the garage, comes up the garage and knocks on the door. And our dog just goes nuts, right?
Yeah, yeah.
And then my dad, with much more colorful language, is shut up, and there's just this explosion. I'm like literally halfway through, like, oh, I'm this money man, I'm this really professional. An explosion of noise, explosion. Like, just there's yours is like distant, right?
Yeah.
And I looked at the phone and I hung up and I never called that company again.
Yeah. If it was,
how do you explain that? I was just like, yeah. I couldn't explain it. I just hung up. I never called the person. And that guy probably wonders to this day. I have no idea what happened. Like, the person never called me back.
Oh, that's what happened. Okay.
Yeah. Yeah. All right, Aaron. It's time for our final question. This has been a lot of fun, I got to tell you. And same final question for every guest, no matter what the topic. If you've already said the answer, feel free to repeat it. And so the question is simply, if you could leave our listeners with a single thought today, what would that be?
I just heard a wonderful podcast. Tim Ferriss is going through his 10-year anniversary, and he's highlighting the best of his shows. And he had this guy named Boyd Vardy, who's like a lion tracker and like life coach, but his family runs a safari in South Africa called Londolozi. And I ordered his book. It's like the Lion Tracker's Guide for Life. It's really small. It's great. There's a part in the book and also in the podcast that he mentioned. I've really been like internalizing recently that I absolutely love. And it's one of not that he isn't, but like the lion tracker who comes from this like lineage of tracking lions for hundreds, if not thousands of years. And the guy said, I don't know where I'm going, but I know how to get there. And I just thought, oh my God, that's such a wonderful phrase for not only life, but especially for investors. And that if you just kind of think about what you're looking for and you look for like the signs and you track and you're open. I never thought I'd be a cannabis investor. I never thought I would be on the courthouse steps buying foreclosed homes. Right. I don't know. None of us really know where things are going. Did you know, Dan, you were going to be hosting podcasts? All right. None of us know. Yeah. But I think if you look for the signs and you stay focused, calm, that you don't know where you're going, but you may know how to get there. I just thought it was incredibly profound.
Incredibly. Love it. That's a great answer. That is a great final question answer. Love it. All right. Listen, thanks a lot, man. It's always a pleasure to talk. We should talk with you more often than every 4 years. I think we'll make it a point to do that.
That sounds great. This was a lot of fun. Thanks for having me.
I want to get you back. You spoke at our conference one year, didn't you? Did you do that?
I did.
I think you did.
I did.
Yeah,
I did.
I remember that. Yeah. It was great, and we got to get you back on stage too at some point. All right, man. Thanks. Thanks very much. Yeah, you bet. Oh, everybody loves it. It's a good time. Vegas. What's not to love? But listen, thanks for being here. Always a pleasure, and we'll talk to you again soon.
Sounds great. Thank you.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.